Are global markets mispricing the latest headlines from the Middle East? Well, global markets started the week with a risk-on wave after comments from President Trump and Secretary of State Marco Rubio signaled a potential breakthrough on the Strait of Hormuz, while oil is sliding and the US dollar is facing low volatility as US markets remain closed for the Memorial Day and Europe is also partially closed for holidays. But before you think this is a green light for dollar alternatives such as the euro, gold, and the yen, let's have a look first at what the chart suggests. So having a look first at the precious metal, we can see that it has nicely found support near the 4480 zone. That's very close to the 200-day moving average. So it creates some sense that perhaps the precious metal might be ready for its next bullish wave. However, looking at the technical indicators, we can identify that the market is lacking bullish signals. Of course, the stochastic oscillator is trying to rebound over here, but the RSI is still comfortably below its 50 neutral mark. So that suggests that the risk is still skewed to the downside, particularly as the price is holding a bearish structure both in the bearish working picture as well as since the start of January. So perhaps the price needs a more decisive rally, perhaps beyond the 4940 in order to change market sentiment. In the meantime, the 4700, the 4780 zone where the previous highs are located could act as resistance along with the 20 and 50-day moving averages. On the downside, of course, any declines below the 4300 and 4365 territory, which would be a violation of the floor seen in March, and a violation of the 200-day moving average could trigger the next wave of selling, probably towards the 4000 or 4090 territory where the price bounced up significantly back in March. Further down, we can see we may found another support somewhere near the 3790 zone or 3700 or 3800 territory. So perhaps geopolitics will remain a key market moving event for the precious metal. So let's see if the US and Iran will manage to find a framework or an agreement framework for the Strait of Hormuz. It seems that the sticking points such as Iran's nuclear production and sanctions against Iran are still a bottleneck for a complete for a final agreement for the two sides. But this could also affect the US dollar throughout the week. Geopolitics will remain a key market moving event for the US dollar as well. But we do have a couple of key events on the calendar as well, including the US core PCE index as well as Japan's Tokyo CPI data coming out on Thursday and Friday respectively. So there might be more volatility in the week during the coming days. But of course, there's always the possibility of FX intervention from Japanese officials, especially if US inflation figures arrive stronger than expected, or if Japanese numbers also come in weaker than expected. So, as the previous release from National Survey also showed, there's let's see whether dollar yen will manage to gain ground. The 160.30 territory remains a key resistance. The 161.30 zone could be another barrier. That's where this line connects to the highs from January and March. And then if the 62 level also gives way, I expect a rally towards the 163.35. Given that there is no intervention in this case. Now the downside, well, we have the 158.75 zone is still a key support since last week. We can see the price stabilizing around this territory. If it fails to hold, then perhaps the 157.85 number could come next into view, while a steeper decline and beneath the 20 and 50-day simple moving averages could trigger a sharper decline towards the 156.35 number. Lower than that, there might be a more important battle between 155 and 155.30, where the 200-day moving average is located. And as we can see, There's also a key ascending trend line, a longer term one from March 2025. So that could be an important rotation region. Well, now as regards expectations for interest rates, well, the investors expect at least a three rate hike coming from Japan, while they only pricing just a single rate hike for the US. So obviously, any volatility in Japanese numbers, CPI numbers, could might be important to watch. Let's see as also the outlook for how the U Fed chairman Kevin Warsh will direct the central bank. That also remains a key question mark. Now, looking at euro dollar, well, the pair started with a positive gap today. It returned above the 1.16 number as risk on kicked in earlier today, but that doesn't mean that we are out of the woods, and the technical indicators cannot support this case either, as the price is holding below its simple moving averages, as well as below this key resistance trend line drawn from January, seen near 1.1750 at the moment. So we need a decisive rally beyond this border, and perhaps a new higher high above 1.18 could actually boost market sentiment, increase buying orders for the 1.1925 number. In the meantime, the price remains constrained, and the support at 1.5060 or 1.1590 is very close. So any negative news, any negative geopolitical developments could negatively affect the euro dollar. We also have regional CPI numbers coming from Europe on Friday. Some of them, especially the ones from France, suggest another spike in inflation numbers, which could be a positive catalyst for the euro. Nevertheless, let's have a look whether that will persist. That will be the case. German readings will be also important to watch. However, now on the downside, if the numbers disappoint and we see the price falling below 1.5060, then the 1.15 number could be the next pivot area. While lower than that, it will be crucial to see the price testing the 1.14 number. That's the floor. Basically, that was a key floor since June 2025. So it will be interesting to see the price testing again this territory after almost a year. So thank you for watching, everyone. This is everything I want to share with you guys. If you would like any extra information about the upcoming events and the technical signals, you can always visit our website. In the meantime, we'll be back on Thursday for more updates. So stay tuned and see you next time. Bye bye for now.